leaking top insider stock trades every day until they stop us, November 13th. We'll start with Resideo Technologies, where a director just bought $250,000 of the stock. This director has a killer track record with an average of over 200% one-year returns on their previous purchases. You'll remember that we found a bunch of insiders buying Resideo Technologies back in August, just a couple of weeks before their next earnings report. That worked out pretty well as the earnings came in pretty good, and then the stock was up over 70% over the next few months. However, why would this insider purchase be less interesting than those insider purchases right before earnings? And there's a couple reasons for that. One, there are multiple insiders buying at the same time back then. This time we've only got one insider buying. Secondly, the price action at that time was much better. The stock was already in an uptrend. However, now the stock just had terrible earnings and fell over 20%, and it's now trading way below its 20-day and 50-day moving average, but quite a bit above its 200-day moving average, so it's a little bit in no man's land. But the main reason is that we had earnings coming up in 2 weeks before, whereas now earnings just happened, so we don't really have any known catalyst for the next couple of months until next earnings. So the price trend doesn't matter very much when you have earnings coming up or some sort of catalyst coming up, because if the catalyst is super good, the stock price obviously will go up quite a bit, and if it's super bad, the stock price will go down quite a bit. So the momentum can flip in a second right when you have a catalyst come out. But right now we don't have a catalyst, and the momentum doesn't look particularly good, and you don't typically want to try to fight the momentum of a stock. That's just a losing battle. So when the stock does eventually cross back above the 50-day moving average, it could be more interesting there. Or if it falls back down and hits the 200-day, you could play for a bounce at that point as well. But right now it's kind of in no man's land. Now, a stock with better price action and some insider buying is Amcor, AMCOR, with ticker symbol AMCR, where an executive vice president just bought $660,000 of the stock. The only previous time he bought the stock was back in COVID, and the stock went up over 100% in the next year. On top of this, a director and the CEO also bought the stock. In this case, the stock is still down about 13% in the last year. However, it has started to move in the right direction over the last month, up about 7% in the last month, and it's trading above both the 20-day EMA and 50-day SMA, but still below the 200-day moving average. Now, we'd probably like for that 50-day moving average to curl up a little bit more and have a little bit more positive momentum, but this is a decent setup. On top of that, the company is trading at a very low EV/EBITDA multiple compared to its 5-year average. This was also their first full quarter with Amcor and Berry combined as a business, and so far it looks to be going pretty well, with synergies slightly ahead of schedule and margins increasing in both segments. There are some concerns with Q1 volumes being down a little bit and some softness in the European market, but it seems like these insiders aren't too worried and they're buying the stock. In this case, it's not the greatest setup we've ever seen. You might want to see an insider with slightly more of a track record besides just one purchase back in COVID, and you'd like to see the moving averages having a positive slope for a little bit longer period of time, but it's a pretty good setup with multiple insiders buying, one insider who at least made one previous good trade during COVID, and the company trading at a relatively low EV/EBITDA multiple with the stock price above the 20 and 50-day moving averages. Go to CEOWatcher.com to get on the daily email.